So hello all my dearest students of South India. I hope you all are doing good and your studies are going on great for your upcoming exams of November 2023. So here I am today to help you all with respect to the latest case laws which has been added by the institute for your November 2023 exams, and it has been web hosted on the ICAI's website. So in all, ICAI has uploaded 13 extra case laws for your November 2023 exams. Okay. So you can get this on the ICAI's website, obviously, and you can see over here that there are 13 case laws over here. But the problem with these case laws are these are very lengthy to learn. And as a student, even if you learn all of them, you cannot write so much in the examination paper, because if you go on writing so much in the exam paper, it will take a lot of time for you to write and it is irrelevant, because the question is going to come for 3 to 4 marks, not more than that. Therefore, it doesn't make sense to write so much. So what I've done it for you all is I have made a summary of all the 13 case laws the way we have done it in our color easy notes for all the case laws of ICAI which is covered in the material. So that we have it in our book in chapter number 75. You can check it over there. This is another summary which is covering the latest case laws which has been uploaded by the ICAI on the website relevant for November 2023 exams. Okay. So what I'll do is I will discuss all of them with you all, and I'll let you know exactly how much to be written in the examination, and that is much more than sufficient for you to score very good marks in the exam with respect to case laws. Now, in the recent past, ICAI has been asking some case laws in the examination, like in the previous attempt in May 2023. They have asked 2 case laws from the latest booklet itself. Okay, so there is a probability that again they will ask some questions on case laws from that latest booklet. Okay, so let us start without wasting any further time. We will start today with the case laws. I'll try to complete that in as short as possible so that on the day of examination it doesn't look as a burden to you and it looks as an ease to you rather than looking like a burden. Okay, so very first case law is of Reliance Communication Limited. What has happened in this case? In this case, what has happened is we are discussing the powers of the tribunal. The tribunal has a power to pass an order under section 254. The question is, can tribunal recall its own order and change the order? Okay, can tribunal recall its own order and change the order? I am not saying that can tribunal rectify its apparent mistake. That tribunal can definitely do under section 255 subsection 2, 254 subsection 2. Tribunal can, I am telling you what tribunal can do and tribunal cannot do. Tribunal can definitely recall its order for rectifying a mistake apparent from record. That it can do. But tribunal cannot recall its own order and change the entire order on its merit. No, it cannot do that. It cannot change its view. That is absolutely not allowed. That is unsustainable. Okay. That is something which is given in this particular case law of Reliance Telecommunication. So Reliance Telecommunication is putting emphasis on the tribunal's power, that it has the power to rectify the mistake if there is an apparent mistake made by the tribunal. But if there is no mistake, you are on your own whims and fancies calling the orders, and then what? Then you are changing the entire order without any mistake. It means that is a power which is beyond your capacity. You do not have that power to do that. Okay, so tribunal does not have this power. So this is the first case law. The second case law is CIT versus Reliance Energy Limited 2022. Now what is happening in this case? I'll explain you with the help of an example. Suppose there is a company, say Reliance Energy, who is claiming some profit link deduction under ATIA, okay, of 60 lakh rupees. Suppose Reliance is claiming some profit link deduction of 60 lakhs under ATIA. Now, Reliance also has some other business which is not eligible for ATIA, okay. In that, there is a loss of 20 lakh rupees. Now, the question which was raised over here was, can the assessee first set off this loss and then take the deduction of the remaining amount? In this case, should an assessee set off first the losses of other business against the profit of eligible business? The profit of eligible business is 60 lakhs. The losses of other business is 20 lakhs. Should the first assessee set off that loss against the profit of eligible business? In my case, should the assessee get the deduction of 40 lakhs after setting off, or will the assessee get the deduction of entire 60 lakhs? So the court has held over here that the assessee will get the deduction of entire 60 lakhs and deduction will not be available from after setting off the loss of other businesses, because the law says that under ATIA The deduction is of eligible business. The deduction is only of eligible business. You are not supposed to mix other items in that. That is, the losses of other business cannot be mixed over here. And therefore, you have to consider that this is the only, this 60 lakhs is the only source of income and take deduction of that 60 lakhs. Okay. So this is what it is given in this particular case law. Third case law, let's go ahead. This is a very, very simple case law, which we have done a lot of time in our class also. Apex Laboratories, what is happening in this case? There is a pharma company who is giving some freebies to the medical practitioners to promote their product. So I am a pharma company, you are a medical practitioner, you are a doctor, I am giving you some freebies so that you can sell my medicine. Can I do so? The court has held that absolutely not allowed. This is against law. The doctors are not allowed to accept such things. It's a ban on their practice if they do so. If any doctor is caught doing such things, that they are taking freebies from pharma companies and promoting their medicines, then that doctor is banned from their practice. Their respective authority will withdraw their certificate of practice and they will be nowhere then. Therefore, even the pharma company should understand the responsibility and should not give them freebies. In case they give them the freebies, it is bad in law. It is not allowed as a deduction. It undermines the public policy. It is against public. Therefore, it will be disallowed under the head PGBP. It is covered in explanation 1 to section 37(1). This is what it is written over here. Next one, case law number 4, a very, very beautiful case law, which is on Wipro Finance Limited. Now, what Wipro is doing exactly? Wipro is doing two things. First, Wipro is engaged in financing. Wipro is also engaged in leasing items. Suppose I am leasing you this particular thing, or I am giving you this, you are my customer. I am leasing you this, or I am giving you this on hire purchase. Okay. I am leasing you this, or I am giving you this on what? Hire purchase. So, you are my customer and I am giving you this plant and machinery on hire purchase. Now, you are saying that, sir, you only finance me for this plant and machinery now. So, you are taking plant and machinery from me, and you, for buying that plant and machinery, you are taking finance also from me only. Okay. I am giving finance also. Now, to give that finance, I have myself financed from some foreign currency. I have myself taken some loan in foreign currency to give you finance to buy this plant and machinery from me, or to take this plant and machinery from me on hire purchase or on long-term lease. Okay. So, I have myself taken a loan in foreign currency and I gave you that loan, and with the help of that loan, you bought that particular machinery from me. Now, I have to repay the loan to somebody from whom I have taken the loan in foreign currency. Now, to whomsoever I am repaying the loan, at that time there is a currency loss. The question is, will I get the deduction of that currency loss? And the answer is yes, because your business is to loan, your business is to finance. Now, to finance somebody, I have taken a finance from somewhere else in the foreign currency, and in that process, if there is a loss, that loss is my normal trading loss and it should be allowed as a deduction. Now, it is wrongly written that it will be allowed under 37. 37(1) does not talk about losses. You all know that. It only talks about expenses. But nevertheless, it is allowed as a trading loss under PGBP. Don't worry about it. Okay. The reference might be wrong given by the court or by the institute. I don't know who has given the wrong reference, whether the court has given a wrong reference or the institute has given the wrong reference. But the deduction of losses which are trading in nature are allowed under the head PGBP. There was one argument that no, this loss is with respect to machinery, therefore it should be adjusted in the machine. No, machinery is not mine. Machinery is of customers. If this machinery would be of mine, if it would have been my machinery, and for buying that machinery, I would have taken a foreign currency loan, then I would have adjusted in what? The cost of the asset as per section 43A. This is not my machinery. This is somebody else's machinery. That person wants what? Finance for buying that machinery from me, or finance for taking that machinery on lease or hire purchase from me. So I am taking a loan from third party and giving to that particular person. So that loan which I am taking on foreign currency, on repayment, whatever is gain or loss, that loss will be treated as a trading loss allowed under the head PGBP. Check it please. Okay. Next case law, a very big name, Anna Saheb Patel Mathadi Kamgar Sahakari Patpedi Limited 2023. It's a very, very, very big name. Now, what has happened in this case? The assessee was engaged in giving credit. Assessee is a cooperative society, for your kind information. And assessee was engaged in giving credit solely to its members. Assessee is not giving credit to anybody else except its members. Now, the department came, the officer came and said that you are working like a bank. And because you are working like a bank, you are a cooperative bank, and cooperative banks are not eligible for deduction under ATP. You might be knowing it. In ATP, who is eligible is only cooperative societies. Cooperative banks are not eligible under deduction under ATP. Deduction under ATP is never allowed to a cooperative bank. Therefore, The officer said that you are running a banking system. We will not allow you the deduction. The matter went to the court and the court said that merely because the society is giving credit solely to its member, that does not mean that they are doing banking activity. That does not mean that they are bank. For becoming a bank, you need to be registered under Banking Regulation Act or some other act which is covered under the nation's law, under the country's law. Then you need to register as a bank somewhere now. Therefore, just because you are giving credit to your members, it does not mean that you have become bank and you are eligible to claim deduction under what? Under ATP. Check it please. Okay. Next case law number 6. What is happening over here? Cognizant Technology Solutions of India Private Limited. Now, what is happening in this case? Assessee was engaged in export of certain items and therefore assessee was set up in SEZ and therefore the assessee was eligible to claim what? Deduction under 10AA. Now, suppose assessee has exported certain items at that time. The dollar rate was 70 rupees. Now, when assessee realized the money from the customer, at that time, the dollar rate is 80 rupees. So, now there is a gain on export. So, whether this gain which he has realized of 10 rupees on export, is that also eligible for deduction under 10AA? So, the matter went to the Supreme Court. The Supreme Court said that yes, it is eligible. That gain on export is also eligible for deduction under 10AA. Be very careful. The Supreme Court said that the gain is not in the control of the assessee. Assessee has not done that upward or downward value of rupee. That is done by the market situation. Assessee does not, he should not bear the burden of that. It is not in his control to increase the dollar price or reduce the rupee price. It is the market condition which is happening. And it is because of export it is happening. If he would have not exported, he would have sold in the local market in INR. This would have not come. That because of export, this gain or loss is coming. Therefore, this gain would also be eligible for what? Deduction under 10AA to the assessee. You can check it over here. Is it clear? So let's move on to this next case law number 7, which is of New Noble Educational Society versus CCIT 2022 Supreme Court. Now, this case law is based on section 1023C clause 6. Now, 1023C clause 6 gives exemption to an educational institution which is solely for educational purpose. Now, the question which is raised over here in the front of the court was, solely means what? Can an educational institute engage in some other activity or not? Or it has to be exclusively for education? Solely means what? It cannot engage into any other activity except education. Every day, morning to evening, only studies. Nothing else should be done. So here the court gave an interpretation. The word solely does not mean mainly or it does not mean predominantly. It means your main activity should be education, but if you do any other activity which is related to education, that will be considered to be solely for education purpose. For example, I have a school. Along with that, we are also giving music classes to the students. We are also giving sports classes to the students. We are also giving yoga classes to the students. It will be considered to be what? It will be considered to be an education institution only. Don't worry about it. Okay. So that is what this case law wants to say. One more point, this case law says that if your main objective is profit oriented, then you do not deserve to claim exemption under 1023C. Your main object should not be profit oriented. Your main objective should be to give service to the people, to give service to the students or the children. Your main objective should not be what? To earn what? Profits. If that is your objective, then you cannot claim exemption under 1023C over here. Okay. Next one is based on the proviso to section 215. Now, what is proviso to section 215? Let me tell you first of all that if you remember the definition of charitable purpose, which is given under section 215 over here, which has 6 specific activities like relief of poor, education, medical relief, yoga services, preservation of monument, and preservation of historical, preservation of environment. These are the 6 specific items which were covered in what? Section 215. But there was one 7th item which was general item. That is covered under proviso to section 215. And that general item says that any other object of general public utility will also be charitable purpose if the commercial receipts in the nature of trade, commerce or business does not exceed 20% of total receipts. Okay. So if your for the 7th criteria, for the 7th condition, for the 7th item, there is a criteria that your commercial receipts in the nature of trade, commerce or business should not exceed 20% of your total receipts. So here the question is, what do you mean by the term commercial receipts in the nature of trade, commerce or business? So in this case, the court has given a very funny judgment, not a funny, actually it's a correct judgment. The court called the department. The court called the department and said that we are not stopping you to deny the exemption. If you feel you should deny the exemption, you can deny it. The court called the SSE. We are not stopping you also to claim the exemption. If you feel you want to claim exemption, if you are correct, you can claim exemption. The court is saying both the things. To the department, it is saying that you can disallow the exemption. To the SSE, it is saying that you can claim the exemption. What shall we do? Then the court gave its original judgment, the correct judgment. This is the first point which the court said. The second point which the court said, you have to scrutinize the situation on a year-to-year basis. Okay. On a year-to-year basis, you have to check the activities of the SSE, that are they charging the customers on a significantly higher price than cost? Okay. If they are charging the customers on a significantly higher price than cost, then it might be in the nature of trade, commerce or business. And if that be so, then you have to check that trade, commerce or business should not exceed 20% of total receipts. You can do business, you can do trade, you can do commerce, but it should not exceed 20% of your total receipts. So first thing which assessing officer has to check every year is whether the activity which the assessee is doing is in the nature of trade, commerce or not. If it is a commercial activity, the second thing which the officer has to check, it's a percentage criteria. It should not exceed 20% of the total receipts. So this is what this case law has to say. Okay. Now, question number 9, case law number 9 is a very, very beautiful case law and it can be a very important case law for your examination. Let me read the heading of this case law. Singapore Airlines, KLM, Royal Dutch Airlines, British Airlines, multiple case laws are clubbed together in one single case law over here. Would the additional income, that is supplementary commission, earned by a travel agent over and above the minimum fare fixed by the airlines be also subject to tax deduction at source under 194H besides the standard commission on base fare? Now, what do I mean by this? For this, to understand this entire sentence, we need to take one example over here. Suppose the airfare fixed by ITA. What is ITA? International Air Transport Association is the ITA. That is a full form of ITA. It's an association which controls the entire airline industry in India. Okay. So this is known as this is the full form and the definition of ITA. So ITA, suppose ITA has decided the fare of Delhi 1 lakh rupees. Now this is generally the maximum fare which an airline company can charge. Okay. Now, suppose the airline company has fixed the fare at 60,000. Okay, they said that we want 60,000 minimum. Suppose the agent has set the fare at 80,000. Why he is setting the fare at a higher price? Because he wants extra money, because he wants to run his business, he wants commission or not. Yes. Now, did you understand these 3 points? First one is the price which is set by ITA, which can be the maximum price. You cannot go beyond that. Second is the price which is fixed by the airline company, which will be the minimum price which they will set. And in between, the agent will say that I will fix a price which will be my commission. Okay. So now, whenever the ticket will be sold, suppose the ticket will be sold at 80,000, 20,000 agent will keep and 60,000 he will give to the airline company. Now, the question over here is, there are 2 types of commission that agent gets. First, the agent gets a standard commission as a percentage of base fare. So, whatever is the base fare, he will get some commission on that percentage. Okay. So, he will get say 7% of the base fare. So, 7,000 rupees he will get as a commission on the base fare which is set by the ITA. They take that as a commission first. Second commission is the differential amount between actual fare and the fare set by the airline company. That is 20,000 in my example. So this is known as supplementary commission. This extra commission which he is taking now, the difference between the price at which the agent is selling the ticket and the price at which the ticket is decided by the price at which it is decided by the airline company, that is 60,000. That differential amount is considered to be a supplementary commission. Now the question is whether TDS is deductible on both commission under 194H. Yes, the court has held that, Supreme Court has held that the 194H does not distinguish between direct and indirect payment. Both direct and indirect payments are covered in 194H and therefore TDS will be deducted on this 7,000 also and this 20,000 also, and this is what it is written over here. You can check it over here. Is it clear all of you? I hope it is clear to all of you. Okay. Now, case law number 10, which was also asked in the last attempt. Pioneer Overseas Corporation USA India branch versus CIT International Taxation 2022 Supreme Court. Now, this case law is based on some international concept that is known as mutual agreement procedure. Now, whenever any assessee has a problem at international level, suppose I am earning some income in United Kingdom and I have issues with the United Kingdom Tax Authority. So, I can go for MAP procedures. I can go for MAP proceedings. That is mutual agreement procedure. I can tell to my Indian government, Indian tax authority that UK tax authority is troubling me. You please talk to them and resolve my issue here, please. So Indian tax authority, Indian competent authority will talk to the competent authority of UK and will resolve the issue. Okay, suppose Apple has some issues in India, so Apple will say to US government, please talk to India, and then US government and Indian government will talk each other to solve the issues of Apple. So the question over here is, just because a matter is pending in international level, does that justify that the AO should what waive your interest under 220, which is chargeable at 1% per month or part thereof when you become assessee in default? Generally, when you become assessee in default, the AO charges you interest at the rate of 1% per month or part thereof. Now, just because you are what? Your MAP proceeding is pending, can the department waive your interest? The answer is no. The court held that just because a MAP proceeding is pending, the department can neither charge any interest nor waive any interest. This cannot be the ground to charge any interest or waive any interest. This cannot be the reason to charge any interest or waive any interest. The department cannot do so. If that be so, if the department start to do this, that just because a MAP proceeding is pending at international level, the department can waive the interest, then everybody will initiate the MAP proceeding in some or the other way, so that they can use this as a tool to what? To waive their interest. Everybody will say that I want to initiate MAP proceeding, and once MAP proceedings will be initiated, they will say that now please waive my interest. That is something which is not acceptable. So what is the moral of the story? The moral of the story is MAP proceedings cannot be a way to defend your interest. Okay, you cannot defend your interest by starting what? A MAP proceeding. Okay, next one, case law number 11, SAP Labs India Private Limited versus ITO. Now this case law is on transfer pricing. Now we all know that transfer pricing is determined as per section 92C and as per the rules made by the Income Tax Department, rule 10C. So there is a separate section for transfer pricing for arm's length price, and there is also a separate set of rules for determining arm's length price. We all know this, right? The question over here is, can a high court interfere in between and determine the arm's length price? The SSC was making an argument that high court does not have the power to determine arm's length price because the power to determine arm's length price is a power of question of facts, and high court does not have the power to deal with question of facts. High court only has the power to deal with question of law, because we all know that tribunal is the last fact finding authority. If you want to go above tribunal, that is in High Court or Supreme Court, your matter should be a question of law, not question of fact. And determination of ALP is a question of fact, not question of law. Therefore, the matter went to the Supreme Court, and the Supreme Court said that, who said that the High Court cannot determine the ALP? Yes, definitely the High Court cannot get into the facts and circumstance of the ALP. That from where you have taken the comparable, from where you have taken this, from where you have taken this, from how you have computed this manner, what is the total of this, what percentage you applied. High Court will not get into that, but High Court definitely has the power to check whether while determining the ALP, whether all the provisions of the Income Tax Act are followed or not. The High Court definitely has the power to check whether while determining the ALP, all the provisions of the income tax rules are followed or not. Definitely High Court will not get into the calculation part, but High Court can definitely give a direction that the calculation was not done as per the Income Tax Act and its rule, and it's within the jurisdiction and power of the High Court to do that. So this can be an important case law. Please be very careful about it. Just because an High Court is giving a judgment on ALP, that does not mean it has to be a question of fact. Even ALP has to be determined by a set of law now. So you have to follow the rules and regulations of the law. The High Court will check that whether you are following all the provisions of section 92C or not, whether you are following all the income tax rules properly or not. That High Court will check. So it's not a question of fact, it's a question of law only. Okay, so this is what this case law has to say. SAP Labs India Private Limited and other appeals. Next case law number 12. In this case law, the issue was, can 271C penalty be levied for non-payment of tax or late payment of tax? Can the department impose penalty for non-payment of tax, non-payment of TDS or late payment of TDS? The answer is no. 271C is very clearly for non-deduction of tax. It is not for non-payment of tax. Section 271C is very clearly saying that I am only applicable for non-deduction of tax. If somebody does not deduct tax on time, you can impose 271C. If somebody does not pay tax on time, 271C cannot be imposed on the SSE. Okay, this is what the law has to say, the Supreme Court has to say in this case. Be very careful. Okay. And last case law over here is ACIT versus AT Dev Prabhu JV and others 2023 Supreme Court. Now what does this case law has to say? Listen carefully please all of you. In this case law, what is happening? There was an assessee who made some delay in payment of TDS. The amount was not substantial. The delay was not substantial. The amount was not substantial. The delay was not substantial. And even though it was a delay, in few days, in few months, the assessee paid the tax and paid the interest also. He looks to be very genuine assessee. He has delayed, but the amount was not substantial. The period was not substantial, but whatever mistake he made, he rectified that mistake by paying the TDS and paying the interest within a particular time. Can still the prosecution be launched on the assessee and put him in jail? Can we prosecute him? The court said no. Even a CBDT circular is there which says that if the amount is not substantial, the period is not substantial, and in the meantime the assessee has paid the tax to the government, you cannot put that person in what? In jail. You cannot initiate prosecution proceedings against that person. This is what the court has to say in this case also. Check please. So I hope this would help you all to a great extent. If it helps you all to a great extent, please share it with all your friends in South India so that it reaches to maximum students across South India. Okay. Like this, I will be coming up with a lot of videos in this month for all of you. Like the latest RTPs, latest MTPs, and some more surprises are going to come for you all the way I have done it for my May 23 students. Till then, take care all of you. Bye, study well, and give your best for the last 1 month. Take care.